February 5th, 2026. Something just happened in the silver market that should not exist in a rational financial system. And what I'm about to show you does not make sense. The numbers do not add up. Silver futures just experienced a violent swing of more than 10% in hours on COMEX, wiping out leveraged hedge funds, triggering global margin calls, and forcing massive liquidations across ETFs and derivatives desks, while at the exact same time physical silver disappeared from the real world. Premiums exploded, vault inventories collapsed, delivery queues surged, mints reported shortages, and industrial buyers started paying far above the official price just to secure metal. And here's the paradox that proves the system is broken. The paper price crashed while real-world silver became scarce, where we expose what is really happening in markets while everyone else is distracted by headlines. And pay very close attention, because this is the part most investors miss. Meaning more paper claims exist than physical ounces. In London, LBMA vaults are seeing persistent outflows as buyers demand delivery. In China, the Shanghai exchange trades at a premium because Chinese buyers are willing to pay more just to secure physical supply. In India, imports surged as households and manufacturers hoarded silver amid inflation fears. In the Middle East, sovereign funds quietly secured strategic reserves for defense and infrastructure. Central banks are silent, but state institutions are accumulating behind the scenes. But they don't want you to know the structural truth. I warned you before, silver is not just a precious metal. I have seen the data. I have seen institutional flow reports. And this is happening behind the scenes while retail investors stare at charts. Think of the silver market like a casino where paper contracts are poker chips and physical silver is the cash in the vault. Wall Street printed hundreds of poker chips for every real ounce, and as long as nobody asks for cash, the casino looks stable. But when players demand real metal, the system breaks. Silver is like a bathtub where the water is physical metal, and Wall Street prints infinite receipts claiming ownership. Industrial demand is draining the bathtub faster than mining can refill it. But paper traders keep printing receipts, so when fear hits and funds dump contracts, the price collapses even though the bathtub is nearly empty. Hedge funds and banks dumped paper while never touching metal. Paper crashed while physical tightened. And here is the difference between villains and smart money. But smart money: China, India, Middle Eastern sovereign funds, defense contractors. Tech giants are quietly accumulating physical supply for decades, not days. Now connect the dots. A 10% move reprices trillions instantly. Margin calls hit, banks adjust collateral, and the global financial plumbing system shakes. This should genuinely scare you, because silver is a leveraged financial pillar, sitting on a finite physical resource, being consumed faster than it can be mined. And here is what they don't want you to understand. We are heading toward a paper-to-physical divergence event, where official prices no longer reflect real-world scarcity. Premiums will explode, delivery delays will rise, and if enough investors demand delivery, the paper system will break, and silver will reprice violently in real purchasing power. This changes everything, so you hold real assets, not promises. You think like smart money, not day traders. We are watching prices fall while scarcity rises, paper collapse while reality tightens. Narratives distract while institutions reposition. The silver market just exposed a fracture in global finance that most investors cannot see. Now watch what happens next, because the next move in silver will not be slow. So if you want to stay ahead, subscribe to Hidden Silver Report and like this video, so more investors see this before the next shock hits. Stay sharp, stay skeptical, and I'll see you in the next report.